It is 8:48 a.m. Pacific Standard Time. It is the 20th day of the second month of 2026. This is episode 1262 of Bitcoin and, wow, Kashkari. Kashkari dragging up the Beanie Babies argument against crypto in general. Says it's utterly useless. That's actually going to start the second part of the show. Then we're going to talk about Lightning up front. We've got some new data in that shows some really good news here. But the biggest news of the day, if you haven't heard it already, is that the Supreme Court has struck down a good portion, not all, but a good portion of President Trump's tariffs, arguing that the 1977 act that Trump used to impose these tariffs was an overstepping of the boundaries as far as the powers of the president is concerned. And that has actually affected the dollar, the 10, 20, 30-year Treasury bond rates. It's affected oil. It's affected everything. Yay, we're saved. I guess. I honestly don't know where this is going to go. It's just, I've been around long enough watching these markets every single day by bringing it here to you here on the Bitcoin and News that I think it's really more of a knee-jerk reaction than anything else. It'll take it'll probably take all the way through today and probably midway next week before we really see the true ramifications in all the markets as to the striking down of the tariffs. Oh my God, they all got struck down. But I got a lot to cover today, so we're just going to start out with Bitcoin's Lightning Network surpassing $1 billion in monthly volume. As adoption grows, Micah Zimmerman, writing for Bitcoin Magazine, Bitcoin's Lightning Network, the Layer 2 protocol designed to facilitate faster and cheaper transactions, has surpassed $1 billion in monthly transaction volume, according to new data from River. In November of 2025, the network processed an estimated $1.17 billion across 5.22 million transactions, marking a milestone in adoption despite Bitcoin's stagnant price performance throughout the year. River's research aggregates anonymized data from major Lightning node operators to provide a network-wide estimate. Their methodology accounts for overlapping channels and extrapolates the untracked nodes, giving a more accurate picture of the Lightning system or ecosystem. Quote, this approach allows us to debunk misconceptions that Lightning adoption isn't happening, River said, noting contributions from entities including Async, Kraken, Breeze, Lightspark, LQWD, and others, covering over 50% of network capacity. Interestingly, the transaction count actually fell slightly compared to 2023. Researchers attribute this to the fading of micropayment experiments in gaming and messaging that had temporarily inflated activity. While these applications did not achieve sustained adoption, River said they expect future experimentation, particularly with AI-powered agentic payments, to drive new spikes in network usage. Last week, Lightning Labs released an open-source toolkit that enables artificial intelligence agents to run Lightning nodes, make autonomous payments, and host paid services using the network, addressing the need for native machine-to-machine transactions. Despite being known as a network for micropayments, the average Lightning transaction in November of 2025 was $223. That's up from $118 the previous year. Analysts say this reflects the dominant use case today, which is moving larger sums between exchanges rather than everyday small purchases. Quote, micropayment theory suggested high-frequency, low-value payments, but mental transaction costs for humans limits this behavior, River explained in a social media report. AI agents, which do not incur mental costs, could change this dynamic, potentially leading to more frequent, smaller payments in the future. Let's pause, because that's a really important statement. AI agents do not incur mental costs, whereas humans do. There's a mental payment that we have to make when we decide to go into our Fountain app and turn on streaming so that, you can stream me Satoshis while you're listening to this show. If you're using the Fountain app, if you're using almost all of the Podcasting 2.0 enabled podcasting apps, you can do that, but there's a mental friction. You've got to go, first of all, you've got to formulate the question in your head. Am I streaming sats to this guy? And then you got to go check. And then if you're not, you got to go turn on the button. And then you got to make a decision. Is it 1 sat per minute, 5, 10, 100? And then there's boosts, right? And this is just for, supporting this show. There is a mental friction there. However, an AI agent is sort of like, can be, and we're going to get into more AI agents in the second part of the show. You can basically say it's this kind of a set it and forget it kind of thing, or you can just give it instructions. If I only listen to this one podcast, I don't know, once a month, then when I'm streaming sats to it, just use the lowest amount that you can. However, if I'm listening to somebody's show every single day, like the Bitcoin and podcast, then I clearly value that more. So give them 10 Satoshis per minute. And then that's it. That's all you got to do. So an AI agent can make those decisions for you. You just set up the parameters. That's sort of what that's saying. And that is going to be important as we move forward. And not just for the Podcasting 2.0 stuff. I mean, for everything. And again, we're going to get a little bit heavier into AI stuff in the second part of the show. Let's continue, though. Lightning Network's rise highlights a layer of Bitcoin adoption that price charts often miss, driven by exchange activity and a growing number of businesses accepting this form of payment. Think Steak and Shake. Crossing $1 billion in monthly volume marks a milestone for Bitcoin's Layer 2 infrastructure and signals progress toward using Bitcoin as a means of transaction and settlement. Looking ahead, River plans to release a comprehensive report on Bitcoin adoption next week, which will include additional metrics showing meaningful growth in usage and integration across the crypto ecosystem. So, yet another piece of Lightning Network news. And I had just been thinking like a couple of weeks ago, we are not hearing all that much about Lightning Network in the news. And I had attributed it to the simple fact that it's sort of just become like putting on socks. You don't really think about socks. You have socks, you put them on your feet because you don't want your shoes to stink so bad. And you don't want to get, bunions or whatever the hell else. And you don't want sweaty feet. Socks, help with that. But we don't really think about it anymore. We've been putting on socks since we were 3 years old. And sort of the same thing with Lightning Network. It's so ubiquitous. It's everywhere to the point that a lot of people are using it. It's what we wanted. A lot of people are using the Lightning Network and don't even know they're using the Lightning Network. This is exactly what we wanted. And yet, when we get what we want, all of a sudden people forget that it's there. And it's a double-edged sword and it cuts both ways. So let's move on to FinTech D-Block, bringing Bitcoin self-custody to 300,000 users with Breeze software development kit. Atlas 21's got it. Deadblock or D-Block, a neobank founded in 2024 and led by former executives from Revolut and Ledger, has successfully integrated Bitcoin technology into its platform, reaching a user base of 300,000 clients. This innovation was made possible through the implementation of the Breeze SDK with Spark technology. The solution implemented by D-Block marks a further step forward in making self-custody more accessible, and the integration provides near instant transfers, negligible fees, built-in self-custody and online payments, as well as speeds comparable to the Lightning Network, while eliminating the need for users to manage payment channels or routing nodes. Again, let's pause and just say that's that mental overload, right? I mean, managing channels sucks. I don't even manage my channels. They still seem to work, but it would probably work better if I got in there and managed these channels. But that's a lot of mental overhead. And I guarantee you, yes, and a lot of people keep saying, why don't you just set up, and I can't remember the name of it offhand, for your Lightning node? I've done that. It doesn't do dick. And it's probably because I've got it set up wrong. That's probably your second thing. Again, we get into mental overload. I got a lot of shit to do. You know, it's like, as much as I would love to be a Lightning, channel management master, I got other things that I really want to do. I would actually really rather have an agent go through and do that, which is exactly what's going to end up happening. Is it safe? Probably not, especially not right now, which is exactly why I wouldn't implement that shit right now. I would wait, and I would wait a good long time, but eventually it'll probably be okay. But still 300,000 users are now going to be able to access Bitcoin in a way, given the Breeze SDK and DBank. This is good news. We just keep moving on, and it doesn't really matter what the hell the price is doing. So anyway, let's just finish this off. The benefits of the Breeze SDK are also accessible to other services such as remittance apps, payroll platforms, and applications that already integrate on and off-ramp functionality for Bitcoin. So D-Block using the Breeze SDK, and again, Breeze has been around so long that their name isn't very often in the news, but they have been here. They're still here. They've been working hard in the background, and we hardly ever hear anything about it because we get so distracted with price news, which I try not to do, but what are you going to do? Because we have the CME group with 24/7 trading for futures and options on digital assets, and that gets to start, yay, May 29th. It'll be a nice little Easter season present for us, I guess. Atlas 21 says that the CME group will begin offering 24/7 trading for its regulated cryptocurrency futures and options starting May the 29th, pending approval. The world's largest derivatives market. Again, the world's largest derivatives market announced that continuous trading will launch Friday, of course, May the 29th at 4 p.m. Central Time on the CME Globex platform. The move is designed to give clients continuous access to to hedging and trading tools tied to Bitcoin and other digital assets, aligning future markets with the uninterrupted nature of cryptocurrency spot trading. Quote, client demand for risk management in the digital asset market is at all-time highs, driving a record notional volume of $3 trillion, that's trillion with a T, across our cryptocurrency futures and options in 2025. Tim McCourt, CME Group global head of equity, FX, and alternative investment products, said the change comes as CME's cryptocurrency complex continues to register record activity with an average daily volume of 407,200 contracts in 2026, representing a 46% increase compared to the same period last year. Average daily open interest reached 335,400 contracts. That's up 7% year over year. Futures have driven much of the growth, with CME reporting an average daily futures volume of 403,900 contracts since the beginning of this year. That's up 47% from last year's levels. Under the new schedule, CME cryptocurrency futures and options will trade continuously, with at least 1 2-hour weekly maintenance period during the weekend. The May 29th launch date remains subject to regulatory review. So if you thought it was bad now, wait till CME opens 24/7 futures and options trading. I hate derivatives. And now it's got its own 7-Eleven, open 24 hours a day, 7 days a week, 365 days a year. You'll be able to gamble in your underwear at 4 o'clock in the morning. You'll be able to lose your children's college money at 2:15 in the afternoon while you're taking a break at work. It's going to be awesome, guys. It's going to be awesome. And before you run out of all of your money gambling on futures and options, consider going to oshigood.us. Yeah, that's Oshi, my good friend Oshi at oshigood.us. 13 jars of Hodl Buddy butter can be had. He's got 4 jars of crunchy coffee Hodl butter. He has, does he have the chocolate one? No, he's still out of the Bitcoin Beans branded Oshi chocolate Hodl butter. If you don't know what Hodl butter is, first of all, think of peanut butter and then realize that what I'm about to tell you blows peanut butter completely out of the water. Because the nut base is pecan, not peanuts. Pecans, maple sugar, that's not maple syrup. That's maple sugar. So please understand that's different, right? I mean, yes, it comes from the same place, but it's really, really concentrated. It's like actually granular sugar. And if you've ever had, if you're old enough to remember, you might remember maple candy that you might have gotten in, like, I don't know, your Christmas stocking, because they were always around during Christmas. And they were basically just little like maple leaves or like some other, like maybe like a snowman or a snowflake, but it was made out of pressed maple sugar. And yeah, while it was attacking your pancreas because you're eating a big old, hobgoblin amount of sugar, it was still delicious because it wasn't cane sugar. It was actually from maple trees. So this is pecans, maple sugar, sea salt flakes will balance out that sweetness. And then you got cinnamon and black pepper, which is a masterstroke of taste. Black pepper. You don't think about using black pepper in something like pecan butter, but Oshi did, and it's freaking awesome. This stuff, I love this stuff. It's so good. So get yourself some Hodl butter from oshigood.us. Make sure you use the code Bitcoin, and you might not get a discount. Actually, you're probably not going to get a discount. Okay. But it lets Hodl understand, or Oshi understand, that I've got a sale that I made for him. And when he finds that out by using the code Bitcoin and when you purchase, he will get me back on the other side for sats because he is in the Circle P. He's a featured vendor for the day. The Circle P is open for business, and it's where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services, but you will be buying it in Bitcoin, because if you're not buying or selling it in Bitcoin, you're not in the Circle P. You know who else isn't in the Circle P is Voltage. I need to talk to these guys about getting in the Circle P, but they don't sell food, okay? They roll out a USD settled Bitcoin Lightning credit line for business. Okay, Bitcoin Lightning Network credit line from Voltage. This is out of Cointelegraph. Bitcoin infrastructure company Voltage has announced the launch of Voltage Credit, a programmatic revolving line of credit designed to let businesses send payments with Lightning-style instant finality while still repaying the credit line in US dollars from a standard bank account or in Bitcoin. In a Thursday release shared with Cointelegraph, the company, which provides enterprise-grade solutions for regulated businesses, said it was targeting chief financial officers and treasurers who wanted, quote, send now, pay later flexibility on the fastest payment rails available without having to hold crypto on their balance sheet. Rather than positioning it as just another Lightning-backed loan, Voltage pitched the product as an embedded piece of the payment flow and the, quote, first revolving line of credit that delivers instant payment finality and the capability to settle entirely in USD, end quote. CEO Graham Krizik told Cointelegraph that while players like Stripe and Block blended faster payments with working capital, they did not embed a revolving credit facility directly into Lightning payments in the way Voltage does, adding that Stripe did not support Lightning at all. In the Block model, he said, Lightning and credit remain separate workflows, whereas Voltage lets businesses originate credit and immediately use it to send or receive Lightning and stablecoin payments in real time without pre-funding or manual treasury movement. Voltage said it departs from traditional crypto lending by underwriting against payment flow rather than static Bitcoin collateral. This is kind of interesting because Voltage already powers the underlying Bitcoin and Lightning infrastructure. It can size and adjust credit limits based on the volume a business processes through its platform. Oh, wow, that's cool as shit, dude. Because Voltage already powers the underlying Bitcoin and Lightning infrastructure, it can size and adjust credit limits based on the volume a business processes through its platform. So I guess they're assessing in real time, over periods of time, how much credit you actually need, given real-time data that's being analyzed in real time and making adjustments on the fly. Nothing like this has ever existed. Now, I'm not going to say this is good, and I'm also not going to say this is bad. I will say that as a matter of fact, nothing like this has ever existed. When you go to a bank and get a revolving line of credit, it's like a loan, but kind of not, right? It's just it's the way it works. But you already know or already have to have a number in your head. And then as you use that revolving line of credit, it's up to you to determine, do you need this much credit? Can you reduce your loan cost on that revolving line of credit by reducing how much you actually need? And that would, maybe you do that every quarter. This does it, it looks like, in real time. And nothing like that has ever existed because without Bitcoin and Lightning Network, nothing like this could have ever existed. This is actually rather fascinating. Again, I'm not saying it's good and I'm not saying it's bad. I am saying that it's fascinating and it's the first of its kind anywhere. Quote, Voltage Credit is the lender of record in our platform, Krizik said, noting that the company originated all loans itself and was not relying on a bank, a card network, nor a third-party fintech to fund the lines. Krizik said the platform carries a 12% annual percentage yield that accrues daily on outstanding balances with a flat platform fee design that's intended to avoid transaction-based pricing that gets more expensive as volumes scale. He said that the revolving lines of credit are not new, but what is new is bringing that familiar financial construct into an environment where Bitcoin and Lightning move money instantly and globally. Quote, we are effectively modernizing the revolving credit model so it operates at internet speed rather than the pace of legacy banking and card networks, he said. The launch builds on Voltage's recent role supporting a $1 million Lightning Network payment between Secure Digital Markets and Kraken on February the 5th, a pilot that was framed as the largest publicly reported transaction on the network. Krizik said that the episode was meant to test Lightning's suitability for institutional-sized flows and that the network is capable of handling massive payment volumes and is ready for institutional scale use. Voltage Credit is initially available to qualified U.S. headquartered businesses, Krizik said, saying that the company can currently serve all United States except, as you might imagine, California, Nevada, North Dakota, Vermont, and Washington, D.C. But apparently they can do New York, so I guess that means they got a bit license. Anyway, early traction, he added, has come from exchanges, Bitcoin miners, gaming platforms, and payment processors looking to reduce idle working capital, avoid forced BTC liquidations, and bridge Bitcoin-denominated revenue with United States dollar-denominated expenses without relying on unpredictable off-ramps. The Lightning Network reached an all-time capacity high in December 2025 of 5,606 Bitcoin amid increased adoption from major crypto exchanges and functionality improvements. Demand stalled somewhat since then, falling to 5,121 Bitcoin as of Monday. Yeah, I don't care. That's fine. It'll be fine. We're all going to be fine. This is interesting. It just a real-time assessment of your revolving credit line needs and a functional readjustment of that, scaling up or scaling back in real time, has never been done. It never could be done. This is something to watch. So this is Voltage, by the way, right? The company's name is Voltage. The company's name is Voltage. So start looking at or keeping your eye tracking for the company's name Voltage as we move forward, because this is probably going to be a big deal. All right, let's run the numbers. CNBC, futures and commodities. Brent North Sea oil down a scant 0.06% to 71.62. West Texas Intermediate down 0.11% to 66.36 a barrel. Natural gas is the hedge today, 4.17% to the upside. That brings it to $3.12 per thousand. Gasoline down 0.15 to just over $2 a gallon. And Murban crude is down a third to 71.83. So there's a fair amount of quiet and waiting going on in the energy markets today, because Trump said something about waiting 10 days. That's the last thing that I heard on the news when I was driving the kids to school. I heard 10 days. He's going to wait 10 days and use that time to make a fully informed decision as to whether or not he wants to slap the living shit out of Iran with some bombs and missiles and whatever else we have a tendency to do over there in the Middle East. So I guess the energy markets are just kind of twiddling their thumbs right now. But the metals market is screaming. Palladium up 4.5%, gold up 1.8 to 5,091 and 2 dimes. Platinum up over 5%. Silver is up 6.5%, back to 82.67 you go. Copper is up 1.8%. Ag is mostly in the green today. Biggest winner is chocolate, reversing its long-standing losses. 4.25% to the upside, going to whittle into some of those losses that it's been taking. Biggest loser today is soybean, down 0.11%. Live cattle down a third. Lean hogs up 0.4%. Feeder cattle down a quarter. S&P is up 0.43%. NASDAQ is up 0.79%. The Dow is stagnant, moving sideways completely, but slightly in the green. S&P Mini is up a very short row of sticks, 0.11% to the upside. Bitcoin chilling at $67,190. That's still a $1.34 trillion market cap, but we can only purchase 13.2 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,992,138.66 of. Average fees per block are average at 0.02 BTC, taken in fees on a per block basis. There appear to be 15 or 16 blocks carrying 34,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities get you in at 0.6. 1.04 zettahashes per second as the V-shaped hash rate recovery continues. And we had a 14.73% increase in the difficulty adjustment, and that happened, I guess, yesterday or something like that. So now blocks are coming in at 11 and a half minutes. So they are already projecting a difficulty decrease 5.35% in 13 days, but honestly, we'll have to give it a little bit longer than that. From episode Personal Fascism, That was an interesting title to write because it was supposed to be like persona, but it's like personal, personal fat, whatever. You'll be fine. Sylvie with 2,222 sats. That's a long row of ducks. Thank you, sir. Says, you deserve some sats, sir. Great content. Thank you, Sylvie. I appreciate that. And Nick_Dose. I don't know why. He used to have it that way, and I cannot get that out of my head. It's Nick Dose with 154 sats says, cheers. And that's all the donations I got. I feel really bad about that. But that's the weather report. Welcome to part 2 of the news that you can use. The Federal Reserve's Kashkari. Crypto utterly useless. Stablecoins are no match for Venmo. Micah Zimmerman brings us all the news you can use about the boomer that is the Fed's Kashkari out of Bitcoin Magazine. Oh my God. Federal Reserve Bank of Minneapolis President Neil Kashkari. Cash and carry. Delivered another pointed criticism of crypto while defending the Federal Reserve's independence during remarks in Fargo, North Dakota today, because that's where we always hang out, is Fargo, North Dakota. It's a great movie, by the way. Speaking at the 2026 Midwest Economic Outlook Summit, Kashkari questioned the practical value of digital assets, stating that, quote, crypto has been around for more than a decade and it's utterly useless. And that was said according to Bloomberg. He contrasted crypto with artificial intelligence tools, which he said has demonstrated clear, everyday utility for consumers and businesses. Kashkari also dismissed the promise of stablecoins, arguing that they offer little improvement over existing payment systems. Quote, I can send any one of you $5 with Venmo or PayPal or Zelle, he said during a question and answer session. So what is it that this magical stablecoin can do? Let's pause so I can answer Mr. Kashkari's question. To save the fucking dollar. What do you think, Neil? Who do you think's going to be buying the treasuries? Your 20-year treasury auction went fucking shit. Nobody showed up for it. Nobody wants this garbage, but you know who's going to buy it? Tether's going to buy it. And for whatever reason, Circle, I hate that company, but whatever, they're still going to be buying. They're the ones that are going to be backing your shit, man. That's why. That's what they do. This is more about stabilizing the United States dollar and projecting that little weapon platform to every other country in the world. It's going to help destroy the Eurozone, which you don't like anyway, Neil. You don't like the Eurozone. You may say that, but you really don't like them. You're converting into the enemy of the Eurozone. So that's what it does, Neil. I can't believe you don't understand this. You're the head dude at the Minneapolis Fed, and you don't understand what stablecoins are doing at this point? Wow. I mean, they might actually suck. I'm not exactly a fan of stablecoins, but I know what they do. I know the underlying structure of how they already do and will continue to interface with the United States dollar, basically acting as rocket fuel. And yet you're sitting here with your thumb up your ass trying to figure this out, and you can not get past payments and Venmo. Sir, you need to be removed from your position at the Minneapolis Fed. Continuing on, while acknowledging claims that stablecoins can make cross-border transfer faster and cheaper, Kashkari argued that recipients still have to convert digital tokens into local currency for everyday purchases. No, they don't. Creating additional friction and cost. No, they won't. He said advocates have yet to present a compelling use case for U.S. consumers. See, let's pause again. He's just thinking about the surface. He is either unwilling, because he knows what's really down there, or unable to dive below the surface and look for the rest of the iceberg. Because 90% of stablecoins effect isn't going to be whether or not I can make a remittance or whether or not I can buy coffee. It's going to be the companies that are backing their stablecoin by buying U.S. debt. That's so in the open. I don't get how he's not even addressing it, which again, it leads me to believe one of two things about Neil Kashkari. He fully knows what I'm talking about, and he is absolutely unwilling to admit it in public because of God only knows what that would do, right? Or he really is this dumb. And I really hope it's not the latter. The thought of the chair of the president of the Minneapolis Federal Reserve not understanding this is kind of scary. It just is. It's kind of scary. He only thinks of consumers. He's only thinking of remittance. He's only thinking of buying coffee. And he doesn't see what's going on in the background over at Tether with the buying of U.S. debt. They are nation state level purchasers of United States debt. And he doesn't seem to see it. And that's kind of frightening. Beyond digital assets, Kashkari addressed criticism from National Economic Council Director Kevin Hassett regarding a New York Fed study on tariffs. The Minneapolis president characterized the remarks as, quote, another step to try to compromise the Fed's independence. Quote, over the last year, we've seen multiple attempts to try to compromise the Fed's independence, he said, referencing a December subpoena from the Department of Justice to the Board of Governors related to building expenses. The Minneapolis president emphasized that central bank independence underpins effective monetary policy. Quote, every advanced economy in the world has an independent central bank, he said, arguing that policy decisions serve the public best when based on data and analysis rather than short-term political considerations. On the economy, Kashkari noted inflation has eased between 2.5% and 3%, while unemployment has risen from roughly 3.5 to 4.3%. He said the Fed is pretty close to neutral after cutting interest rates multiple times over the past 2 years. Last November, Kashkari had a similar criticism comparing the sector to the 1990s Beanie Babies bubble and arguing it still lacks meaningful economic use. Speaking on CNN, he said that he was more confident in the utility of AI, which he sees as delivering real economic value, whereas crypto fails to demonstrate a compelling purpose. He questioned the everyday use of digital assets in the United States, noting that the main application he hears is to bypass banking regulations like Know Your Customer and anti-money laundering rules, a use he described as lousy for a Federal Reserve policymaker. Why would a Federal Reserve policy depend on banks having 100% access to all the information of every customer that they have and having even more access to people trying to bypass that system would be better? You think about that. How is a Federal Reserve policymaker required to have as much AML KYC information? The Federal Reserve, as I know it, is not an enforcement arm of the judiciary. It's not a police force. Maybe in economic terms, kinda, but not really. But it certainly doesn't have agents walking around, knocking on people's doors saying, hey, man, did you KYC yourself to Wells Fargo? Yeah, and this brings up what I just talked about, Voltage. If Voltage can build a real-time, scalable, revolving line of credit, then how would this not translate into the future as being able to take Neil Kashkari's job? Think about that. What is a revolving line of credit? And if we scale it up a lot, we start getting into Federal Reserve territory. Kind of. I mean, not exactly, but it's starting to look a lot like that. if I was Neil, I would be getting my resume together in the next 10 years. All right, Bitdeer stock crashes 18% on $300 million convertible note offering. Dilution fears mount. No, it's not. They're not scared. Bitdeer guys are not selling their stock because they're scared of dilution anymore. They know this convertible note offering market is saturated. Saturated. I won't even use the word oversold or overbought. It's just saturated. If I hear the words senior convertible note offering one more time, I'm going to get sick. It's going to make me nauseous. I may not throw up, but it's definitely not going to, it's going to dampen my appetite. And I've already lost too much weight. I don't need this shit. Stop offering convertible notes. My God, Micah Zimmerman, Bitcoin Magazine, Bitdeer Technology shares slid sharply today. Wow. After the Singapore-based Bitcoin miner and AI data center firm announced plans to raise $300 million through a private sale of convertible senior notes due 2032, a financing move that sparked investor concern over potential dilution. The company said that the offering, aimed at institutional buyers, includes an option for initial purchasers to buy an additional $45 million in notes, which would bring the total raise to $345 million if exercised. The notes would be convertible into cash, Class A ordinary shares, or a combination of both at Bitdeer's discretion. Bitdeer stock fell over 18% in pre-market trading, dropping below $8 for the first time since April. Shares were down roughly 15% on the day, reflecting market caution about the capital raise and the possibility that future conversions could increase the company's share count. Convertible debt offerings often pressure equities because investors anticipate dilution if the stock price rises and note holders convert their holdings into shares. Bitdeer said it plans to enter into capped call transactions with financial institutions to help offset dilution risk. Such hedging strategies are designed to limit the number of shares issued upon conversion, though they can introduce additional volatility around pricing. Alongside the note sale, Bitdeer disclosed a separate registered direct offering of Class A ordinary shares to certain holders of its existing 5.25% convertible senior notes due 2029. The company said the number of shares and the price will be determined at the time of pricing. Proceeds from the offerings will be used primarily to fund capped call transactions and to repurchase a portion of the 2029 notes in privately negotiated deals. Any remaining funds will support expansion of Bitdeer's data center footprint as well as growth in its high-performance compute and AI cloud business lines. The company also highlighted ongoing development of ASIC-based mining rigs as part of its longer-term strategy. Bitdeer said the direct share offering and note repurchasing are contingent on completion of the new note sale, though the notes offering itself can proceed independently. The announcement comes as Bitdeer accelerates its pivot beyond Bitcoin mining toward broader infrastructure services. The company recently reported fourth quarter revenue of $224.8 million. That's up 226% year over year, and posted a net profit of $70.5 million compared with $531.9 million loss in the prior year quarter. Bitdeer mined 1,673 Bitcoin during that quarter, supported by a managed hash rate of 71 exahashes per second, including 55.2 exahashes per second of self-mining capacity. The company also held roughly 2,000 Bitcoin on its balance sheet at the end of the year, though more recent data suggests holdings have declined after liquidations earlier this year to fund expansion and to get ahead of the Bitcoin price dropping, I would assume. We don't need any more of paper Bitcoin. We just don't. We really don't. And one of the things that this article suggested to me is that if you do buy these notes or any of these convertible senior notes and they're convertible to Class A shares, I had always kind of thought that when you convert the note, to shares, that the company actually had to give you the shares that they hold on their books to do that. This is clearly not the case. So I've got yet one more thing wrong. No, they just print more shares when you convert. I mean, why not? You're converting one thing that was printed into something else that was printed. So really, it's, net zero in toto. The real damage was done when you just decide, hey, let's do convertible senior notes. Let's print, 300 million of them and let them go to town. That's where the damage is done. Still, though, more damage can be done to the existing shareholders later on upon that conversion, because if you're going to print more shares of what they already have, well, then, there you go. So the damage, I guess it's not really net zero. The damage is actually done on conversion. Who knows? This casino is so confusing. And it's not really that it's confusing. It's that you figure out that everything that you thought was nice and shiny isn't really nice and shiny at all. It's actually just a piece of cardboard held up by Kneecapper McGinty that somehow, if you get crosswise with him, he's going to break your fucking ankles. Right? You got to pay up there, pal. You're in our casino. You lost because you're designed to lose, and the casino's always designed to win. You literally watched me learn something new. I had no idea that they just would print shares upon conversion. I literally thought all this time that they actually had to have the shares that were old, that they had either bought back or they kept for themselves, that it came out of their little stash. No, they just apparently print more shares. I feel embarrassed, but hey, this is how we learn. And you might as well learn in public so everybody else can feel better about themselves when they go, I can't believe you didn't know that. Moving on to Warhammer veteran Jervis Johnson. He has a warning. AI could become the asbestos of the internet. I love this term. I don't think he actually coined it. Let's find out more from Jason Nelson out of decrypt.co. Artificial intelligence could become the asbestos of the internet, according to one of the architects of Warhammer 40,000. Jervis Johnson, a longtime designer behind Warhammer 40,000, Necromunda, and Blood Bowl, criticized generative AI while supporting Games Workshop's formal ban on the technology in its creative process. So Games Workshop isn't even allowing their developers to use AI at all, which is an interesting play. Let's see how it works out for him, Cotton. Quote, most of the stuff that I've seen doesn't seem to actually quite match up to the hype. I saw a great quote recently saying that AI is going to be like the asbestos of the internet and the computer industry, that we're going to be spending decades getting this stuff out again after we've used it a lot and found out it's actually a bit rubbish, Johnson told gaming outlet Fiverr. Games Workshop, founded in 1975 and listed on the London Stock Exchange since 1994, is one of the largest tabletop gaming companies globally. In January, the makers of Warhammer 40,000 and Warhammer Age of Sigmar reported about $422 million in revenue and $178 million in operating profit for the 26 weeks ending November 30th, 2025. In its half-yearly report released in January, Games Workshop CEO Kevin Roundtree said that the company does not allow AI-generated content, nor AI to be used in its design processes or its unauthorized use outside of Games Workshop, including in any of its competitions. Quote, we have agreed on an internal policy to guide us all, which is currently very cautious. For example, we do not allow AI-generated content or AI to be used in our design processes or its unauthorized outside use of Games Network. Yeah, we just saw that. Oh, well. Quote, I think it's the right move for a lot of companies, to be perfectly honest. I haven't had a lot of experience with AI because I don't use it. It's not the way that I work, and I'm old, so I don't have to. It's a newfangled kind of thing that I don't really get involved with in the first place, end quote. He said generative AI does not deliver high-end creative work, and in the end may be more harmful to developers than helpful. Quote, I think that if you're going to do stuff at the top end, do properly interesting, creative stuff. Then AI doesn't help you. It's a hindrance basically because it allows you to be a bit lazy and not put in the effort, Johnson said. He described the development of Warhammer 40,000 as a process built on sustained human effort. Quote, there was a lot of work involved there, a lot of thinking and thought and meetings and planning and discarding ideas. I worry that with AI, what it does is just cuts that all out and shortcuts to kind of an average answer, end quote. The asbestos of the internet. That's an interesting term. Now, clearly he heard it somewhere else, but think about it this way. Asbestos is freaking great. It's a great fire retardant. It's a naturally occurring mineral. It's a rock. And when it forms, it's like these huge fibrous formations. They have a massive sample in the United States Smithsonian Institute in their geology and rock building, something like that. And it's gorgeous. It's dangerous AF. Why? Because as those fibers break off, they get embedded into your lungs and it can cause cancer. And many times it's not that it can cause cancer. If you breathe enough of that shit in, first of all, you're never getting the fibers out. You can't. It's impossible. And as those fibers embed there, they're always going to inflame your lungs, and scar tissue is going to build up. So it's going to reduce your ability to actually breathe anyway. And if you get enough of it and it stays there and you live long enough, you're going to probably end up with cancer. It's bad shit. It is not to be used in human endeavor. But we didn't know that when we were wrapping every pipe and lining every wall in every building that we could find with this shit, because it doesn't burn. It does not burn. I mean, it's like you can have a whole freaking mechanical room on fire. Like you douse the whole thing with gas, and the only thing that will get destroyed is the actual generator and anything that's not wrapped in asbestos. Everything else, fine. So it limits the spread of fire. It protects a whole bunch of shit. And we have spent the last 50 years tearing it out of everything. And if you've ever seen an asbestos abatement program going on like a multi-story building, A, it takes years. B, it's expensive AF. And C, well, does it actually work? Did you actually get rid of it all? If AI ends up being the way Johnson suggests, like asbestos, it's going to be a problem. Now, do I think he's actually correct? I think in some ways he is. I think a lot of the early models, early implementations, like Microsoft Copilot, a couple of other things, probably more than a couple of handfuls of things, there's going to need to be an effective remediation on those things, or they'll just be discarded and rebuilt from the ground up, depending on how far the hooks of AI got into those systems. For all of it, no, it's not going to be asbestos. There is actual utility in artificial intelligence. But like any tool, I have seen, actually, it's been me. Because I couldn't find a hammer, I have nailed a nail into a wall with a pipe wrench. Yes, I'm that guy. I've done that because I didn't have a hammer and I needed a hole in the wall that would accept a nail. I used whatever the hell I had handy. If that was my only way of using tools, like if I was the guy that literally did that all the time and had no idea how to use a complete set of tools, this is the person you don't want building a house. And if, for God forbid, he actually completed building a house, you'd have to tear it down. No, AI is not going to be as bad as asbestos. Yes, these early implementations are probably going to be as bad as asbestos. Speaking of AI, Accenture is tracking whether or not their employees use it. And promotions are on the line. Jose Antonio Lanz scares the hell out of anybody working at Accenture from decrypt.co. Want a promotion while working at the company Accenture? You'd better start using the company's AI tools, and regularly, because they're watching. The consulting giant has begun collecting data on weekly logins to its AI platforms from senior staff and sent an internal email to managers and associate directors making it clear moving into leadership requires regular adoption of artificial intelligence, according to documents seen by the Financial Times. Unlike other companies that either punish AI usage or are trying to get rid of human employees in favor of AI agents, Accenture is essentially turning AI tool usage into a KPI. One of the products under the microscope is, of course, Accenture's AI Refinery. The enterprise platform CEO Julie Sweet has been heavily promoting to investors. Accenture's business model is built on advising other companies on how to modernize, and apparently it wants to set an example for other companies dealing with the dilemma of using AI at work. Quote, our strategy is to be the reinvention partner of choice for our clients and to be the most client-focused, AI-enabled, greatest place to work, an Accenture spokesperson told Decrypt. Quote, that requires the adoption of the latest tools and technologies to serve our clients more effectively. The move is part of a larger internal pressure campaign to force the adoption of AI. Sweet told investors in September that employees who couldn't adapt to AI would be, quote, exited, end quote. It's a nice, for us, all I can think of is suicided. You will be exited. Anyway, the company's own language describes workers for whom reskilling is not a viable path as candidates for separation, according to The Guardian. The login tracking policy is the formal version of that threat. Accenture has been on an AI spending spree. It trained 550,000 of its 780,000 employees in generative AI and committed $1 billion a year to learning programs. In December, it announced partnerships with both ChatGPT creator OpenAI and Anthropic, which is maker of the Claude chatbot. Last June, it merged all of its main divisions into a single unit that it called Reinvention Services and started calling employees reinventors. I wonder if they have Hawaiian Shirt Day. Just last week, Microsoft's AI CEO Mustafa Suleyman argued that most white-collar roles, including lawyers, could be fully automated by AI within 12 to 18 months. Not years, months. Accenture is making its consultants prove they use AI tools to keep their jobs and potentially obtain better ones. At the exact moment, the people building those tools are saying the jobs may not even exist much longer anyway. A Pew Research Center survey from February 2025 found that 52% of U.S. workers are worried about AI's impact on the workplace, and roughly 1 in 3 think it will shrink their long-term job opportunities. Manpower Group's 2026 Global Talent Barometer, which covered nearly 14,000 workers across 19 countries, found that regular AI usage actually jumped 13% last year. Confidence in it, though, collapsed by 18%. Quote, workers are being handed tools without training, context, or support. Manpower Group's VP of Global Insights, Mara Steffen, told Fortune some 64% of those surveyed said they're staying in jobs they hate, specifically out of fear that jumping ship during an AI transition is too risky. The confidence collapse hit hardest in older demographics, exactly the group Accenture is targeting with the policy. Baby boomer confidence in AI dropped 35% according to that survey, while Gen X confidence dropped 25%. Accenture itself acknowledges older and more senior staff are more resistant to adoption, and its solution is apparently to just monitor their login frequency and dangle potential promotions over their heads. Or the term exited as you will be exited. I love it. As Decrypt previously reported, a Yale Budget Lab study found the broader labor market hasn't actually seen AI-driven disruption yet. Jobs are shifting about 1 percentage point faster than during the early 2000s internet boom, but it's barely measurable. The apocalypse is still pending, but the pressure on individual workers to perform AI fluency is already very real. And, according to Accenture, very measurable. How would you like to work at Accenture at this point? I mean, on one hand, what an awful thing. You better use AI or we're going to exit your ass. Or you better use AI if you want a better position in our company. Talk about a lock-in. That shit's fucking evil. But on the flip side, Accenture isn't just exiting everybody and going to AI. They haven't announced mass layoffs yet, right? They are actually getting people that work for them and pick up their paycheck and as part of their corporate culture and makes their company what it is. They're giving them the tools to actually, I would say be better, but I'm not going to say that because I don't know if it means better. To at least be trained in using AI. That's better than what a lot of other companies are doing. So honestly, I kind of don't know where I lean on what Accenture is doing. What say you? Meanwhile, and last up for this week, Malaysian authorities arrest 12 cops over alleged crypto extortion, according to a report anyway. The Block, James Hunt writing, Malaysian authorities have arrested 12 police officers accused of extorting about 51,000 USD in cryptocurrency from a group of Chinese nationals during a midnight raid on a house near Kuala Lumpur. Selangor police chief, no way I can pronounce it, said that the arrest, announced on Thursday, follow a complaint filed on February 6 by one of 8 alleged victims aged between 25 and 45, local media reported. The group alleged that officers stormed a bungalow in Kajang district outside Kuala Lumpur, confiscated phones and laptops, and forced one victim to transfer digital assets to a specific cryptocurrency account. Immediate action was taken and 12 cops were arrested to assist investigations, Kahar said, adding that authorities are treating the case as a gang robbery involving a foreign national's cryptocurrency. I guess they didn't want to piss off China. Kahar said that the Selangor police contingent will not compromise with any officers or members who are involved in criminal activities. The arrest came days after the King of Malaysia, the Sultan Ibrahim Sultan Iskandar, warned that corruption within government institutions remained under scrutiny. And on Monday, the monarch said corrupt individuals across agencies, including the police, were on his radar, adding, quote, "Do not think I don't know anything. I also have my own intelligence," end quote. Malaysia's government has stepped up anti-corruption efforts since Prime Minister Anwar Ibrahim took office in 2022, charging several senior officials and public figures in recent months as part of a broader push to curb abuse of power across the public sector. So there you go. The good old Sultan doing right by the people of Malaysia. Oh, who knows? He's probably just as corrupt as anybody else. AI and employment. Look, I'm not going to sugarcoat this shit for you. We can hate it all we want. You know what that sounds like? The buggy whip makers who lobbied Congress to make driving automobiles on the streets of the United States illegal. And then after they figured out that shit wasn't going to happen, they lobbied to have the red flag laws put in place. And if you don't know what the red flag laws are, essentially, if you wanted to drive a car, you needed to have a driver, an engineer, and a flagman to drive a car. They wanted to make it so insanely unproductive to actually use the vehicle that they were lobbying successfully Congress. And for a couple of decades, it kind of worked, but it just fell apart because people wanted cars. They didn't want to saddle up their horse and put tack all over their horse and feed their horse and comb their horse out and get all the shit out of their hooves and shoe them and all that. They just wanted a car, man. They just wanted to go outside, crank a handle, and go where the hell that they needed to go. Right? So the car won. Same thing with AI, man. This shit isn't going away. So you're either going to learn how to drive the car, or you're going to waste your time for 2 decades lobbying Congress to try to convince them to enact some kind of red flag law. And it's just not going to work. It's never worked. There's real utility in AI. Now, so happens that everything that I said is not only true, it's kind of a harbinger of bad news. If you're alive today, I am worried about what my kids are going to do. I can tell them, oh, well, you better start using AI. Well, yeah, I mean, duh, but is that going to be the fix? Not really. Where we're at in human history is, not going to say turning point because it's really cliche. We are at an inversion. That's the only way that I can even think about it. Everything that you thought you knew is no longer going to be true. Every job that we thought needed to be done by humans is now in question. Even more in question today than it was yesterday, and it's going to continue that way. Will we need lawyers? I'm not going to say no. So the question becomes this: will we need as many lawyers? No. Will we need surgeons? Yeah. Will we need nurses? Hell yes. Will we need as many nurses? No. And that's sad. People that are sick need a human touch. Okay, I don't even want to get into that one because that's a different one. Do we need human sex workers? Yeah, that's a thing. Will we need as many? No. It's like, I'm not going to go fuck a robot. Yeah, you probably won't. You probably won't need to. You probably just sit on AI and create a character that does all the funky shit your wife or husband will never do for you. And wear a suit that, I don't know, has like integrated into your brain that makes you think you're whatever. It's a funky new world out there, people. I don't know if it's brave, but it's definitely going to be funky. Just understand that you can either think, oh, woe is me. I'm scared of losing my job, or I'm not going to be able to get a job, or I'm going to be stuck in this job forever because I can't transition out because of AI. If that's the way you think, if it's only going to be negative, then woe unto you. If you can convert and invert your thinking and say, I'm actually alive during a pivotal moment of the human experience for all time, what wonders will I see? That may mean that you have to see it and never have the mansion and the 12 yachts that you want. Again, I'm going to go back to what I've said many times. The question is only this: what is wealth? Is it money? Is it multiple houses? Is it a vault full of gold? Is it 12 Lambos? Prada products? Or is it a healthy, strong family on a little bit of land that you are in love with? Is it being able to see the beauty in flowers? Are you able to see the beauty in sunrises and sunsets, midday? Is love of another person wealth? Is your health wealth is finding something to do, even if it doesn't get you the 12 yachts. If you are just absolutely in love with it, is that wealth? Because the answer of wealth being nothing but a shit ton of money and 5 yachts, if that's your idea of wealth and you don't have it yet, then woe unto you. And I'm not saying that you're not capable of doing it. I'm just saying that, do you want to fight and give up so many hours of your life to get a yacht that you would do it? Or would you like to be able to say, I'm actually happy with what I have? And not let the people say, yeah, you're just giving up. Am I? Am I really giving up, or have I just fucking seen the truth? We're all worm food. What do we carry with us after we die? Do you carry the yacht? No. Do you carry beauty? Maybe. Yeah, you have a lot better chances of carrying the love of a cherished other, the beauty of a peony flower, the smells that remind you of when you were a child, memories of your grandmother, your mom, your dad, your sister, your brothers, your children. You have more chance of carrying that with you across the threshold of death than you do a McMansion and 5 yachts. And certainly not a Lambo. Determine what wealth is for you. If that wealth does not coincide with where we're going with this inversion of humanity, then you're probably going to have a bad time. Always buy Bitcoin. At least do that. But let's reevaluate what wealth is and put our efforts into creating wealth that is unexpected. Have a great weekend, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.